What's up, YouTube? Eric here. Today I'm excited. I'm going to bring you three stocks. They're three of my favorite stocks. They're semiconductor stocks that I think are attractive, that could be buys even at these levels. Now, one of these is a larger cap stock that I'm sure you know a lot about. The other two are actually pretty small. They're smaller cap type stocks. And you might have heard about one of them, but maybe not the other. All three of these I think are very interesting. You're going to want to see this video, guys. So stay tuned. This is Fidelity's new research tab. If you guys seen this, I'm not sure if I love it yet. Maybe it's just because it's something new, something different. The first stock on the list, let's get this one out of the way because you guys know I'm already bullish on this one. AMD. I also like NVIDIA too. AMD is actually more attractive from a valuation perspective. I think both are great stocks long term. So if you look at this one, guys, you can see this is a 2-year chart down here. And this thing popped all the way up to 160 bucks a share, something like that. It's trading now about $104, $105. You can see the PE ratio on this one's 39.66. It doesn't pay a dividend yield. Short interest right now is only 2%, which is actually pretty good. So shares short, you got 33.47 million. That's pretty low. This historically has been much higher than that. And there's actually an analyst day coming up, and I want to share some of that information with you. I think it could be a catalyst to make the stock go higher. Okay, so AMD to host Financial Analyst Day on June 9th. That's this Thursday. It's June 6th today. So AMD announced that the company will host its Financial Analyst Day on Thursday, June 9th to share updates to the company, the corporate strategy, technology, product roadmaps, long-term financial model, growth opportunities, and more. There's a video webcast you can check out. So what could we expect from this Analyst Day? So Wells Fargo analyst here, Aaron Rakers, recommended buying shares of AMD ahead of this Analyst Day. He anticipates a positive review of the company's product roadmap and technology differentiators. So Rakers is betting on proliferation of Zen chiplet-based architecture, their X3D packaging, evolution of AMD Infinity architecture, and so on. He believes investors are looking for AMD to provide long-term 2021 to 2025 revenue, compound annual growth rate or CAGR in the 20% plus range, and profit and loss input supporting a path towards $6 a share in earnings per share EPS by 2025. That would be very positive, of course. He's positive on the ability to continue to gain market share in servers. This is a big deal. You think of the data centers, you think of their Xilinx acquisition, and also PC, CPU markets as well. And then ahead of Analyst Day, Stifel analyst Patrick Ho also expects the company to highlight emerging market opportunities like the data center, which we expect, and how this growth will drive additional capacity expansion for foundry logic devices and other semiconductor products. So this will be really good to see. He believes AMD's comments will further support his secular thesis on the semiconductor capital equipment. I've been calling semiconductors the new oil since August of 2020, and there are supply chain risk and issues, but AMD, I think, is still a buy, even at these levels. It has support around $95. And if you look at this too, there's a couple other things. We actually still have $8 billion of share repurchase authorization. So you can see they had an $8 billion share purchase authorization plan, and they already had $4 billion in place. So they're still buying their shares. We don't know how much they bought until they released the updated numbers. Maybe that's part of the reason the stock held in there. But anyway, they're buying some of their shares back, and that should help keep that price a little bit higher as well. Keep it probably closer or above that $100 range. I've been saying, guys, if AMD gets below $100, it's a buy. Anytime it dips back below there, I think it's an opportunity to add shares as a long-term investor. Now, if I look at this, guys, it's down about 26% year to date. You can see, now this is not, you don't want to buy stocks just based off this. This is on CNN Business. Do not buy stocks based on this. But I think it is interesting because it shows analysts, there's 20 analysts that show a buy rating. There's 5 outperform, 13 hold, 1 sell, and 0 underperform. And you can see the range is anywhere from $230 a share, which is 100% plus return from here, down to $80 a share, which it was just in the 80s maybe a week or so ago. But this range is pretty positive. I think it's safe to say longer term, if you hold this, especially if you're holding this for 3, 4, 5 years, this should be a nice long-term winner and compounder for your portfolio. Okay, so this next one you might not have ever heard of. We bought this in Discord back in January of 2021. We bought it around $27. I think added more shares around $30. So between $27 and $30. It's now $62. So it's up over 100% since we bought it in Discord. It's still behaving very bullishly. They've been doing well in their numbers. This is a 17P ratio, so it's still attractive at these levels, in my opinion. It's a small cap, only a $2 billion market cap. What do these guys do? Let me give you just a brief summary of what they do. Okay, so these guys have been around for like 40 years, and they serve the approximately $2 billion ion implant systems market, as well as other areas. They're based in Massachusetts, headcount greater than 1,100 employees worldwide. Global infrastructure supporting customers in 32 different countries. Growing install base of 3,200 tools, strong IP portfolio, and so on. So they're making semiconductor equipment is what these guys are doing. And I'm going to show you a little bit more about this company. So Forbes 2022, America's best small companies. Excellus was named to Forbes list of best small companies. This was rated number 21 out of 100 companies. Also in the top 100 for women-led businesses. Just some quick highlights on this, guys. You can see the Q1 FY 2022 highlights. This is a recent deck, I think, from May. But you can see they're expecting to achieve annual revenue of $850 million, actually more than that in 2022. And it's a $2 billion market cap, so I think it's still attractive. You can see some of the numbers here. Strong first quarter financial performance, revenue of $203.6 million. Earnings per share of $1.22. You can see some of the growth, and they've continuously improved and added products here. Unprecedented market conditions and still performing very well. Growing implant total addressable market. They've got a differentiated product portfolio, continuous innovation, strong balance sheet, strong manufacturing capability, quality focus, strong customer relationships, great employees, and so on. One thing that I will point out about this company, it does have additional exposure and risks when you think of China. So that's something to keep in mind. And that could hit the stock, okay? And if it did, I think it would be an opportunity to buy it longer term, but it is a risk that you need to be aware of. You can see the ion implantation, so high current TAM, 50% or more. I won't bore you to death with this, but you can see some of the target segments here. This is really what they're working on. So you've got these Purion, and a lot of this actually is used for EV chips, okay? So that's part of the reason I really got interested in Excellus, is because they were doing more semiconductor equipment manufacturing for these EV chips, which I think is gonna be a huge secular growth trend. And not just EVs, but just cars in general. Just cars in general have more and more semiconductors. You think as we get towards autonomous vehicles, electric vehicles, hundreds of chips in every one of these cars. And these guys are going to continue to be part of that story. Okay, this right here, guys, is the money slide for Excellus. Strong market conditions expected to continue. Semiconductor golden age continues. All segments continue to grow. High fab utilization is required to support these strong overall market conditions, driving significant systems capacity additions and very strong service business. Unprecedented CapEx spending levels continued to rise, okay? Now listen to this. Fundamental growth drivers for long-term cycle. We've talked about all these secular growth trends that semiconductors are the new oil for. Communications, 5G, phones, Internet of Things, data analytics, AI, visualization, metaverse, and more. Now the bottom part, this is the money ball for me. Electrification of the automotive industry with driver assist, computer on wheels. This is why I'm very bullish on Excellus. Now look at the very bottom. This is huge as well. Additional accelerants to the near-term rapid growth. I think this will extend for a few years. Device shortages are impacting many industries, causing additional investment. So people are spending money to build up and to ramp up. Geographical fab expansions over the next several years, driven by nationalism and government incentives. Everybody wants to be the leader in fabless. We're going to spend more and more money. Excellus is one of those companies that will benefit from geographical fab expansions. I think this is a big reason why the stock is still a buy now. Initiatives will accelerate Purion growth across all markets. So here we go, guys. Geographic expansion. They have a China emphasis that I mentioned that could be a risk. Japan focus on power devices, image sensors. Footprint growth in our existing customer base. So they're adding more product types, expanding their existing customer footprint. They've got new implant applications, collaborating with customers and industry peers to develop novel uses for ion implant, additional creating manufacturing capacity close to our customer support, and so on. You can see these guys are doing good things. You can do some more homework yourself on here. Here's some gross margin improvement. They're trying to get to 43 to 46% in 2023 and beyond. And they've done a good job for their shareholders. I have conviction in this company. Even at $60 a share, I have conviction in their management. And I think this one will continue to do well. Okay, so tying off that EV megatrend, right? So this company, I've talked about it before, interviewed the CEO on the channel. If you haven't seen that, check out the link above and go watch that. There's a 35-minute interview with the CEO of Indie Semiconductor. And so when you think of this, here are the different areas they're focused on, not just EV, but also with the UX and the connectivity. When you think of the dashboard connecting all your apps and connecting the car, your music, all that. And then you got the ADAS and the AV, so everything. When you think of all this, the motion sensors so that you don't turn into another car, that you have to brake if the car's, braking in front of you. There's all these different sensors and semiconductors that go into these new vehicles. It is a smaller cap company, guys. In fact, if you look at it where it's trading right now, this is actually trading microcap $1.12 billion. Okay, so this is a pretty small cap type company. I'm covering, a $2 billion company with Excellus and a $1 billion company with Indie. Now this, if you're buying this stock, it's ran really hard. It was down, I think, in the fives not too long ago. Yeah, $5.07 on May 12th. So be really careful chasing it here. That last earnings report they had was pretty solid. It made the stock kind of pop. Now what I'll say, if you look at this, this was a SPAC, okay? And I talk about this if you listen to the interview with the CEO on the channel. And you can see it started, the $10 SPAC, and then it popped up. The high on this thing was way up here, like $16.33 back in November of 2021. That's the peak for most things, right? So it's come down quite a bit, but just realize it has popped hard off the bottoms. And this thing is not profitable. It does have 10% short interest right now. Okay, it doesn't have a PE ratio. This company, this stock, it'd be something you hold till at least 2025 as a spec play. They have several contracts in place. When you think of the European partnerships that they have, they're building these products. They've already got contracts on, and they'll start rolling out production in 2025. So you're going to see the numbers on this stock come to fruition in 2025, 2026. So you could have some time on this one. It's one to add in your radar. I'm just accumulating shares. The lower it goes, the more I accumulate. My cost basis right now is somewhere in the sevens, I believe. So I'm just continuing to add, and I'm looking at this as a long-term 5-year plus type holding. Hope this video helps, guys. If you have not subscribed to the channel, do it now. Subscribe. Click that bell to get notifications. Check out Patreon if you have not already. So Motley Fool did actually sponsor this video, and you can go to the link, motleyfool.com/firedupwealth, to see the top 10 stocks to buy now. Please drop me a like, drop me a comment. Have a great rest of your day. Take care.